All right, what we're talking about today is why I have $13 million and you don't. The thing is, intelligent people avoid instant gratification. And what I want to describe is how you can accumulate wealth just like I accumulate wealth. Now, I have a secret, and I hate to burst my own bubble, but I have to wait 35 years until I can spend that $13 million. In fact, by the time I get my hands on that money, it might even be a lot more than that. 13 million is a conservative estimate. This is all about psychology. As I said, good things happen to those who wait. Intelligent people avoid that instant gratification to spend the money they have today, and they lose out on the possibility of compounding interest in the stock market, in the S&P 500, or in more aggressive investments if you so choose. But time horizon is everything. By utilizing the time value of money and compounding interest, I want to prove to you that you can be a millionaire as well, just like me. Now, just so we can run through the numbers, so we're all on the same page, I am in a position where I am fortunate enough to save, let's just say roughly $4,000 a month for about 35 years. And let's just punch this into the interest, the compound interest calculator. So I'm going to put in my current principal, and then I'm going to go ahead and add my annual addition into the compound interest calculator. My annual addition on the conservative side is going to be about $48,000 a year that I'm going to save into an investment account. Now I'm going to let this grow for 35 years. And why 35 years? Because that's when I want to take it out and spend it in my retirement. Even once I hit 59 and a half, I don't have to spend my money in my retirement. I can let it grow. And then the interest rate, S&P 500 historically has paid between 6% and 10%. On a short-term investment, the stock market is very risky. But if you go all in 100% S&P 500 over time since the beginning of the stock market, we're talking a solid 8% gain a year or more. So I think 8% is pretty conservative for such a long-term investment. Now I'll go ahead and calculate this. There we go, 13.3 million. And that's conservative if I continue to make my same salary that I make right now, and I make the same investment of $4,000 a month into my nest egg and continually let it compound. But this isn't all bad news. I'm not here today to tell you that you can't be rich. In fact, I want to describe to you the process, how you're going to be rich like me, you're going to accumulate wealth like me, and you're going to be a millionaire just like me. So, step one, we're going to start setting aside money every single month into an investment account. The most basic formula is to put in $5,500 a year into a compound interest account and let that accumulate over your adult life until you hit retirement. If you're later in life, in your late 30s, 40s, or 50s, you're going to have to wait until your 60s, 70s, or 80s to get your hands on that lump sum. Trust me, it'll be worth it. If you're in your early 20s or your early to mid 30s, it turns out that you're going to have a lot more money than the numbers we're talking about. So let's break down this math a little bit more. If your current balance, your current principal today in the compounding interest calculator is $0, and your annual addition is $5,500, and you're saying to yourself, Brad, $5,500 is just too much. I don't have that money. I've got kids. I've got a house payment. I've got a car payment. I've got bills. I need to eat. I've got student loans. I've got credit card debt. I've got my Hulu bill. I've got my Pandora bill. I've got everything, right? All you need to do is scrounge up $459 a month. If you can get $459 a month and send it to me, no, just kidding, $459 a month, and put it into an investment account, that will add up to $5,500 at the end of the year. And save that for 35 years at an 8% interest rate, the same interest rate that I'm earning on my $13 million is the same interest rate that you're going to get. So we're on a level playing field. We'll do the math on that. Boom. $1.02 million. We're now measuring your wealth in 7 figures, and that's cool. So one last note here. Did you notice something interesting about the $5,500 a year? That's a pretty nice coincidence that Uncle Sam has created something called an IRA, an individual retirement account that allows you or me or any U.S. citizen to set aside $5,500 a year into the individual retirement account. Now, the other good news about that is that the IRA is tax-free. And just double checking, there's more good news. The IRA contribution limit for 2019, as I suspected, just bumped up to $6,000. So if we're doing the bare minimum of $5,500 a year in your IRA, that's no problem, but you could actually contribute up to $6,000 a year. Now, I said pre-tax. So if we ballpark say that your tax rate's 20%, it's going to be 20% cheaper to invest that $5,500. So you might actually only pay $4,000 out of pocket to fund your $1 million retirement. And if this all seems like too much, the complexity is too great, you can't pay out of pocket the $459 post-tax, it'd really be only around $390 pre-tax a month. I want to ask you again to think about this from a psychology perspective, to avoid that instant gratification of spending your money today on material things, on things that you need to have, and put that money away for yourself. You're not giving this money away. It's your money for the future. Run this scenario through your head. If I were to hand you $1.02 million today in cash right now, would you take it? Yes or no? With the only catch is that in 35 years, you have to give me $459. Think about that. You tell me if you would take the $1 million in exchange for a mere $459 or not, and I'll let you decide. And that's why I have $13 million, and you will also be a millionaire with me.